Hello everybody, today is Monday, April 8th. This is Booksy. We're going to be doing an update pretty much exclusively on AMC. I'm going to do a really quick, brief overview of what I think is going on in SPY and in the Russell 2000. Russell 2000 being the one that we've been watching the most often lately because, those are smaller caps. They've been kind of teasing this possible SOS here, and I say possible because even though I think it's very likely, it is in a rising wedge. Volume has been dropping a bit, and you can see there's a decent divergence right now in RSI. It does look a little bit like, if you just looked at RSI and you didn't know what was going on in the price action, it looks a little bit like a LSPY kind of action where you've got this bigger upthrust, and you've got basically a bear flag that looks like it might come down again. Now, if that were to happen, and it looks like it's kind of teasing it right now because you've got this kind of touch right underneath 204.84, which is really that support level that we're trying to get above and hold above. I think you're going to look at a possible drop and retracement back to the beginning of this, which would take you back to that moving average. I do think it's very possible we could go back down to like the 194 region. There's a high liquidity pocket at 195. That could be a sort of spring action that leads us then to a bigger breakout to the upside, a bigger reversal back above. I don't see this as a large-scale distribution. I think that unless this is some kind of massive UTAD, which doesn't really make any sense, didn't really set up that way, I still think long-term it's making higher highs, higher lows. It looks good. I just think in the bigger channel, you could see a bigger pullback and then a continuation. If it doesn't do that, and even if it does and it's kind of mild, you could see there's some lower catches that could happen at like 200. I think that you're going to look at a second wave that's about the same length as this first wave, which went from 160 up to 204. In my opinion, this is about a 50% marker of a bigger S-curve movement, sort of an impulse movement. So I think you're going to see it push up probably to all-time highs if it can gain that traction. However, that being said, SPY is also doing some stuff which it's done before, and it's done these kind of widenings that are rising. It's done it continuously, and I've misread the last few and said that I thought that, you're going to have a bigger pullback because it's doing that rising action, and it hasn't. Like every time it's kind of done one of those, it's really just broken back to the upside very, very strong. All that being said, you can see that RSI on the whole has been divergent for quite a while, and we are over, obviously we're at new all-time highs at this point. We're pushing it, and I think that that's pretty significant. We haven't had a big pullback to come back down and retest the 480s. We haven't really even gotten close to checking our moving averages in a little while. And I think that while I'm bullish on the whole for the most part this year, I think that there's, again, it's just like IWM, there's definitely a possibility that we just need that bigger pullback in the market. That being said, if we don't get it, I don't see why we can't be pushing 560s in the near future just based on the way this thing would break out and targets for that. So it's kind of a mixed bag. I think we're just sort of waiting on probably some, more Fed news and other things like that. I think a lot of this, and I talked to Stockfather a little bit about it, a lot of this is probably profit taking and changing positions in March, because this first quarter's done. They're going to be swapping out their positions for things that are more profitable, and that's why we're seeing kind of a hesitation in the market. So we'll see what happens, I think, in the next month or so, going into May probably. I'm going to just focus exclusively on AMC for the rest of the time. I'm not going to be talking about, I know some of y'all are watching Hycroft Mining, some of you are watching ChargePoint. Those charts have their own stories to tell, but I'm not going to tell those stories right now. I'm going to be talking mostly about just the big picture down to small picture price action on AMC, and unfortunately it's not looking great. And I know you're thinking, well, previously you've been a bit bullish on it on the big picture. You said you were bullish on the big picture. Are you still bullish on the big picture? In the grand scheme of things, yes, I am. But I think, just like I've said before in the past, I'm really not looking for a big move this year. And I know that goes against what some of the other people might be saying who are just, no offense, but they're kind of always on the hopium train, the hype train. I'm not always on the hype train. Sometimes I feel like there's a possibility of a big move. We've kind of dodged two big possible moves here, two big breakouts. both of them have broken down in a very systematic way that we're kind of used to at this point, where they sort of feign to the upside and then they sort of fake out and then die. They do some up thrusts and you end up with that distributive action. And I identified it this time pretty early on. I talked about this top being highly distributive, and and it's a lot of it just has to do with volume. You can see that the highest peaks of volume are right here. Both of these are failed lower high actions. You can see they're being pushed down. Buyers are getting shut down, and there's no buyback in. It's like there's no wall. It's just extremely low volume here, except for this highly volatile upthrust, and that's not usually a good thing, especially on AMC. So in watching this, I was really watching what I was calling the ice. And before I get too deep into this, I want to talk about big picture, but this is basically where I was thinking we needed to hold. We had some strange price action here that looked like it could be bullish. And of course, this was going right into, and it's a bull trap, plain and simple. I mean, it broke out and it looked like it held above and closed above that support level that we've had after a dip, which made it have the appearance of a spring action that would then continue to the upside right here. And you can see why. You have the literal spring. I mean, you have a spring with a retest type action. And I know that with the top being what it is, you might be looking at this saying, well, wouldn't this just be a series of LSPYs and this being like a kind of a final gasp? Well, sure. Yeah, I mean, I think it could be that simple, but that's not the way I was reading the range. And I really did think that with the way this set up, specifically this lower area, this could be a spring action, this little range right here. But this whole fake out occurred into that announcement of, once again, we're having a several $100 million share offering, and it just felt very rehearsed. It felt like there was a very clear desire from earnings up to this announcement to just kind of keep the stock pinned, to just sort of trade this area, really probably just swapping out short positions and getting ready to advance again to the downside. And I think that this was just a way of kind of teasing out a possible spring action and swapping out positions for sure. I mean, there's a lot of buying that happened in here as well, but I think a lot of it has to do with the rehearsed action of that dilution effort. And I don't know what exactly prompted them to wait so long, but you can kind of tell by the volume and the fact that there was no buying here. That kind of bothers me a lot. It's just very little trading at all. That it really was just shorts waiting. There wasn't really any strong evidence of a big buyer stepping in. I mean, it could have happened at any time. Didn't happen. We didn't even get an upthrust back to the top of the range again. So I was watching this descending triangle, and I had picked out 367 and 512 as possible break targets. And when we did break down, that's pretty much exactly where we landed. That was Bukowski's mathematical procedure. So I mean, it did happen to match in like a previous support, but it just so happens that was the breakdown target, because Bukowski's methodology is usually pretty darn good. And unfortunately, because that breakdown happened, we had then some continuation, because this ended up being like that fake out. So big picture wise, am I still bullish? Yeah, and I've just said it a minute ago. I'm bullish long term. I've been thinking about how this probably isn't going to go up till 2025, 2026. That's been my opinion for a while. Is that when we started breaking down back here, even if we got that push up to 14, we could still see a massive drop. And that was sort of my generalized prediction for the beginning of the year, was that we'd see something similar to this diagram up front, which has really been the motif, as you can tell, for pretty much everything that we've seen. I mean, this is essentially like this is the breakdown that results in this kind of move back to the upside, and then you try to break out, and if you don't, you fail here, then you end up coming back down. And this is repeated throughout all of AMC's price action over the last 2.5 years. I mean, the first one we identified was back here in July, and then, of course, there's a larger one here, and then you can see the bigger picture, and there's all kinds of others. And I've been using this as a generalized kind of guide because I think that it's exactly what we're experiencing on a fractal level. However, That being said, you might be saying, well, you thought, Booksy, and you were wrong, that we were already in this bottom area here, and then you thought maybe twice that we were in this bottom area here. So where are we exactly? Well, at first, yeah, I thought it's possible we were in this bottom area when we first started coming down. There were a lot of decent indications based on the volume, the massive kind of volume that we had, that we might be in that kind of bounce region, and that we sort of skipped to 50%. The keen listener, and I'm not going to sit here and try to defend myself, but I will say that the keen listener probably remembers me saying that I really hope we're not in this middle area, which would mean that we're kind of in the middle of an S-curve. There's two problems with this. One is that, when we look back at the previous iterations of this particular kind of downtrend, you can see the M cross happens, but it happens like in a falling action. That's one part of this. The second part of this is the S-curve. And the S-curve, as I've always kind of defined it, has been like this, right? I don't typically talk about the S-curve as this very large action here. But if you wanted to, you probably could, right? So you could probably define it as the action from the breakdown here to the bottom. And you can see what I mean. There's almost like a perfect sort of inversion, almost like a reverse, I call it rotational symmetry type action here, right? And that's absolutely one of the ways you can look at this. So there's two major S-curves you could follow. And when I look at the bigger one, a lot of times what I start thinking about is the one that has like both of these. One of the things I start thinking about is what happened back here in August, which was after that big run up, not August, I'm sorry, after what happened in March and that breakdown. Because during that time period, if you recall, and I'm going to kind of use this chart for just a second, we had a pretty massive S-curve that came and it broke down beneath a trend. And this has happened multiple times. You can see there's one right here. There's probably another one right here. You can see like what defines it is that there's a falling kind of cat ear action where you have like ear 1 and then you have a breakdown ear 2 and then you continue down to the bottom. And you get that M shape in the middle, and that's kind of what I was talking about with that first one, as opposed to using the bottom itself as part of the S-curve. The same thing happens here, right? And the main predominant action here, I mean, you can see here it's on the moving average, but is that you're coming back to a previous sort of support level. You're always doing that. You're always breaking down. It might be at an angle. It may not be, but that middle point is always like a key breakdown level, and you can see that that's the breakdown. And then oftentimes what follows is there's a very large, continuation. Sometimes it's about the same as the beginning. I mean, you can see it repeatedly throughout this stock and the breakdowns. This is a larger example of, or another example, of like that particular kind of move that we had over here. Almost the same, right? You go from the top of the channel, you hit a 50% marker, you kind of bounce along the bottom, same thing here, right? And you can see that depending on how you define this, you can see there's one right here. As you can tell, that's how you measure it would determine whether or not that's your, I'm using this tool instead of the S-curve tool, that's why it's doing weird stuff. Keep forgetting to double click. That would be one way to define it, and another way would just be simply to just take the bigger picture and be like, well, I think that's the bigger one. And they're both right. They're both S-curves. And we've talked about S-curves so much. I'm not going to repeat all that here, and I don't want to waste your time. But it's very, very important to remember that this is like a falling cat ear, right? Like if we're looking at this closely, you can see the markers as they appear. That M-shaped cross is happening, but it's happening at a really steep angle. And ultimately, like this breakdown is not, it's not over until you get like that last stretch. And usually, that breakdown includes this kind of pushback up to retest the previous area. The reason that is so bothersome right now, and I talked about this a bit on the stream, is because a while back I had a prediction that a lot of people just thought was ridiculous. I got ridiculed for it, and I get, anytime I come out with anything bearish, people are always like, it's not possible, it's not possible. I remember back here thinking, well, we're going to get to 350 or whatever, and people were like, it's not possible, waiting for it to happen, it's never going to happen. And then we hit lows of like 360s after hours. And now look at where we are, $3, and that's after a reverse split. So we're really like way lower, you know. And I had a similar prediction when we were using the combination chart. The combination chart was APE and AMC's market caps averaged out to a chart, and I don't have that pulled up right now, but one of the very last predictions that I had on it was one of an S curve. Just talking about this, was this big S curve down. And in that particular situation, the S curve looked like it was from the beginning, obviously, of APE's inception. And it really looked like it could do that, right? And it did. The thing is that after the combined value happened, this obviously looks really different because it says $8. But at the time, that combined value, which again was that market cap, weighted market cap average, it did say that the S curve would hit $1. And again, like, I always have people who came on and were like, that's never going to happen. That's never going to happen. And when I did the very first video this year, I said, well, maybe we go to 14 and then back down to 1. And that was based on, again, this same motif that we're talking about, that we might have this kind of push up right here, right? And that could lead you to like lower lows in a breakdown schematic. That could lead you to lower lows. And that push up should come up to about $14, which is the bottom of that previous range. It makes the most sense to me. And I still think that makes the most sense to me. And there are other reasons for that too, like the check on this downtrend that we've not made yet, right? But time is also important, because if you don't, if you take a year to get there, it may not look like $14. It may look like $8, like it changes over time. So early predictions were basically like wrong that I had, because my expectations were that it was already kind of hitting that bottom, and it wasn't. So then you have to go back and you have to say, well, does that drastically change everything? And I think the answer is, yeah, it could. The problem with this is, just like those other S curves we were just looking at, it's plain as day. You can see it. I don't have to sugarcoat this for you. If this is the S curve and it continues downward, this is going towards $1. Now, you might say, Booksy, that's not possible. Market cap doesn't make any sense. We'd have more cash on hand than we would market value. Yeah, we do. And I mean, frankly, at that point, you could just, it doesn't even make sense, right? I mean, it just doesn't make any sense. You have more cash. But at the same time, this company has more liability than it does profit. It has more liability than it does assets. If they sold all of their assets, they could not pay off their liabilities. And to a short, I hate to say this because it's just echoing what the negative sentiments are, especially that Adam Aaron puts out a lot, is that you basically have bankruptcy on the table, because you can not, unless you get that debt restructured, and obviously that's been the talks lately for kicking the can down the road. Until you return to profitability and you get the debt restructured, this is not a buy. I mean, it's just not. And I know that I talk about the charts a lot, and I say that the charts are really important, and a lot of times they don't. I mean, it's true. The chart here did not at all obey what would be a fundamental analysis. So absolutely, like, technicals can sometimes trump what we think of as the fundamental analysis on the stock, but you can't ignore the fact that this is also a technical setup here. If we get another continuation down, and this is that double cat ear, and frankly, that's what this looks like at this point, because it continues to fail to make rebounds. We're not getting those spring actions as we see them, and we're not seeing any kind of major buying pressure to stop this bleed out, at least for now, unless this is a shallow S-curve, and I'll talk about that in just a second. This just looks like a four-top to me. I mean, if you just draw it out without all of the clutter here, you can see it. I mean, and that's typically what we see on the second cat ear, and I've called it that for a while. Other people call it different things. It doesn't really matter what you call it. It's this kind of secondary move here. It usually is that second cat ear. The way I've always drawn it is that there's usually a first ear. Sometimes it comes up higher. Sometimes it doesn't. Then the paw, sometimes comes up higher. Sometimes it doesn't. So this one could come up high. This one could be a little lower. It doesn't really matter. This is the distributive action as we see it, and it happens all over the place. And this is just distribution. You can go look at it. It's basically just like a UT with a UTAD. I call it cat ears, but this second one ends up being very flat. And that's very typical of the distribution cycle. So if you're looking at this from that point of view and you take this action and you do what I just showed you, where you stretch it down and you make it into an S curve, this is what I'm talking about. Like, this is what we see on these kind of dropping actions, is that you end up with this very, very clear and distinct first ear, second ear kind of business. And guess what? Not surprisingly, that's also where you get that cross. Does that make sense? So this is the primary action that I'm looking at. And it's impossible for me to ignore the fact that this is the way it's currently setting up. And it has not done what we want to see as deviation in AMC. So what we're looking at right now is back here is that this is the second ear. And in my opinion, it's either a spring action from here, right, which we have seen on a shallow S curve in the past, or it's the midpoint basically right here is your essentially your midpoint on a larger S curve. And I hate to be the bearer of bad news, but it's, again, straightforward. That's the $1 target. I looked at it pretty consistently, trying to make sure that I was not making stuff up, right? And I went back and I, again, duplicated that trend that we looked at really early in the year. And sure enough, you can see it's just bouncing along that trend, which is the previous kind of creek level here. And if it doesn't have that rebound soon, and this is on the weekly, as I'm looking at it right now, you can see that if it doesn't rebound off of this top trend here and make that push, I don't see why you don't drop down to the lower trend, which ultimately was established very, very long time ago in 2015 when the distribution cycle really first started. It's kind of a way of retesting and regathering everything. And this S-curve, it measures out like perfectly to $1. I mean, it's kind of gross, but it's the way that it is. I mean, you can see it very plainly, if you draw it down to the base here. Very straightforward, and you don't need me to sort of sugarcoat it for you and make it seem better than it is. It is a possibility. And you might say, well, where was that upthrust then? Well, that demands a buyer. The fact that we got these bigger upthrusts in the past had to do with companies like BlackRock driving the price up to then redistribute. And they weren't bullish. They were bearish at the end. And that's important to remember too. Just because you get that big move doesn't mean it's bullish. I mean, that big move to me has always been like possibly just a big way of redistributing. But we're not seeing a need for that if they can continue to push the price down. So locally, going back to like the smaller picture, this is the 4-hour target that I had for the larger creek. And I've talked about this quite a bit because on like the weekly and the daily, if you don't have that extended hours on, this doesn't really look like the creek. And I think I just made a case that sort of shows that we're already sitting on the creek. In this previous example, it looks like we're already kind of on it and maybe even just broke down beneath it right here. I mean, frankly, that's kind of what it looks like, right? Like we just pushed down beneath it and rejected. That's true. But the big picture has a very different story, in my opinion, going back to the original point that we pushed up on way back at the beginning of 2017. It was really the very end of 2016. That marker to me is probably more significant. And I know that this is going to be a place where a lot of people disagree. My thought is that we're going to hit that mark, and that's where we're going to kind of stop and maybe ride along, possibly into earnings. I know I have it going up here, but that was kind of like my idea of like what could be a spring action. But I don't see why this couldn't easily just be something like this either, Time is always sort of flexible, and you can pretty easily see how that could be the case. One of the main issues that we've had is that every time we've broken out of this orange line, which is very significant because I did a very large comparison video, and I talked about how this marker here that comes down through this original ear, this is basically the large cat ear right here on the big picture, the big flat one we talked about, 1, 2, 3, 4. This particular marker, once you break down, usually the S curve rides it, and then once you jump back above it, you go. So you might be saying, well, that's not good, because it looks like if we were to continue down, and let's say we did go down really, really low, and we broke down to like $1 or something, it could take a long time to get over it, right? And that's absolutely true. It could. That's not out of the question in my mind. But lately I've been like watching, and I was like, well, we almost broke out of it. I mean, you could see that we came across it, and this is where things go from like being really bullish to being kind of bearish, is that every time we've come across this, we just find very little buy-in. I mean, the same thing happened back here, and it was right before the dilution, and then right here again, right before the dilution. It just feels very orchestrated. It's like anytime we jump over this, lately there's been an earnings and then a dilution, earnings and then dilution. I mean, it's almost ridiculous, like it seems like there's a fox in the hen house, right? Like somebody knows, and obviously somebody does know, and they're just waiting for the news to drop because they know that AMC doesn't have another hope. So my original guess was that we were going to drop down here and possibly have like a terminal action that gets us here and then maybe rebound. And I think it's still possible. But at this point, you're going to have to kind of break out of this lower range. I don't think dropping beneath 3 is okay. Stockfathers PNF said that anything below $3 is not spring action. We definitely dipped beneath it a few times. It should be a natural wall, but all I see is the volume dropping as we're kind of banging against the $3 wall, and I don't see that as strength. There wasn't any support here. We dropped right beneath these two trends that you can see coming down. These are pretty significant as well, and I thought that we might actually bounce on them. They represent, in a lot of ways, the other major creek that we needed to kind of test, and that's this one, if you remember from that breakout. And that's where we're going across right now, and we just dipped beneath it. So that's not a good thing, right? It kind of represents a really bad sticking point for us, and that's all there is to it. I'm not trying to be like super bearish just because. I'm saying that the markers and the volume have yet to show anything like really, really positive. So until we see this kind of rebound over this orange line again, I've talked about this before, I don't see a reason to be bullish. And I said the same thing back here, that unless we get back above 5, I don't see a reason to be bullish. Even though, yeah, this looked like it could be a breakout, it didn't even break like that local, we call it like a trend, right? It just didn't even go above that. So we've got a ways to go. There's a lot of weakness here, and unfortunately, with dilution on the rise and not seeing an end to this, and frankly, I think Adam Aron's tweets have been basically just telling people what he already knows is going to happen, which is that downside is coming, and he's not positive at all. He's had a negative sentiment, even though they've been knocking out these earnings reports lately. He still had very negative sentiment because he's seeing this dilution coming. He knows it's going to happen. He's going to keep doing it. The board's going to keep doing it, and that's going to drive the price down. So he's basically, I think he's just padding it with negative sentiment and sort of justifying the need for dilution, I guess. That's all I've got. I don't want to be overly negative about this. I really don't. I think that RSI being oversold like it is may seem like a big deal, but you have to remember that on like the big picture, this RSI has been way worse. It's been down to like on the weekly like 13s, and I think the fact that we might see something like that again, I think it's kind of obvious. Like this is definitely a possibility that we get a bigger drop down to the 20s, maybe sub 20s on RSI. I don't think it's a guarantee just because you're already oversold that it's going to go up. I don't think that mattered back then, and I don't think it necessarily matters now if the general market is just kind of against AMC and sees it as a stock to short. So all that being said, I'm going to try to keep doing some updates this week if things change. I appreciate you guys sticking it out with me, and I will talk to you later. I guess I should leave you with a couple levels. So I still think that the red line is kind of where we're going. I think if we do have another drop, I'm hoping that 272. It's kind of hard because it's just sort of floating out there. There's not really a lot to confirm that that's where it is. But I'm looking at 272 as the most likely support beneath 3. We'll see from there. Okay? All that is good. I hope you guys have a good week, and I will talk to you later.